a lot of people now have actually given up, and there are others that say, well, it's never going to happen. The price will be held down forever. But I don't believe that's the case. And the elements that some of which weren't even, considerations 5-10 years ago, such as the green movement with the EV vehicles and this type of a thing, and carbon neutral, everything is going that way. Silver is going to be a major, and is right now, a major player in that transformation. And to think that this is going to go on indefinitely, I think, is to be naive, to be charitable, and understandable, because it's gone on so long. And we've talked about these opportunities, which were going to have a silver blast off. And when they failed in 2011, I think people thought, well, it'll never happen. But buying in tranches, not over purchasing and not going on margin, this type of a thing, and just putting it away and not looking at it every day is the way, in my view, to wake up one morning and be quite surprised when silver is up $5 from the previous close, on its way to heaven knows how much more, in a way that'll be a one-time opportunity in our lifetimes. And there won't be an opportunity to sit around and wait for the next opportunity, because there won't be one. It's up 4 or 5 times like certain stocks are. It's still trading at half of its nominal value. So it's really got a lot of catching up to do. And what silver likes to do when it decides to catch up is it really goes. And there's none of this sitting around waiting for a retracement. When you wait for a retracement, you end up waiting for the intermediate top. That mobility plays itself out in an analogy as the ability to buy and sell in a very liquid environment. In fact, that's the double-edged sword of gold and silver, is that people sell what they can during a panic, and they can sell silver and gold just instantly. Try doing that with real estate. Try doing it with most stocks when the bid-ask spread gets really wide. And so they use that to cover their other bases when maybe they bought on margin and things like this. But the fact that gold and silver bounce back, shows you that safe harbor is always going to be there, and people buy it back as soon as they can. And even during the near financial global collapse in 2008 and into 2009, look what happened at the end of the year in 2008. About the only asset class that was up at all was gold, and it was up 4%. Doesn't sound like much, but when other things are down 25%, that's a huge deal. And in my writing of this essay, one of the reasons I wanted to do it and use this analogy, beyond the analogy itself, I want to get people to think about the fact that they are literally on a financial battlefield. Well, for one thing, silver arguably is the most undervalued metal on the planet, and it's the only metal that has not exceeded its nominal high since that time, which is just crazy, because it's arguably one of the 2 most critical metals in the metal space. Well, for one thing, silver arguably is the most undervalued metal on the planet. I mean, you look at a chart from 1980 and today, and it's the only metal that has not exceeded its nominal high since that time, which is just crazy, because it's arguably one of the 2 most critical metals in the metal space. Copper being the other one, but that has a different metric as well too. But when iron is up 700 or 800% in price from its 1980 high, and the others are up 300 or 400%, and silver is at 50% of its 1980 and 2011 high, it really doesn't make sense, especially when it's literally the critical metal for modern day living in just about anything you can imagine. So I think that I've made the comment before that everybody knows the price of silver by looking at the COMEX or some other measurement indicator, but nobody knows the value, because it's been suppressed and ignored for so long, and assumed that it would always be that kind of a low price for producers and investors, that a lot of people have lost heart or lost interest. But that's the type of circumstance that you want to find when you have this asymmetric reward potential, where a modest amount could give you several times what you put in. I mean, talk about that with almost any stock on the board, or bonds or anything else. I mean, where's that kind of potential? It's in silver. Silver, along with gold, is the financial protection for other asset classes that you hold. And so what we found in 2008 is just one example, is when we had the crash of all sorts of markets. Gold and silver originally dropped, but then they turned right around and came back up again. And also the paper price and the real price that you could actually purchase it for disconnected. So there was a price differential of up to $4 or $5 in silver, where it was trading at $9.50, but you couldn't pick it up for less than $13 to $15. The same thing with gold, which was $100 differential, and even platinum and palladium. So it kind of blunts the losses that you would have from other asset classes, even real estate, and plus it's so liquid. The most recent stats that I've seen, even the last few years being a bit lackluster, or the area between 2011 and late 2015 notwithstanding, gold still compounded at an average annual rate of about 10%. That's really darn impressive. And I think most people that are in the S&P 500 only, or in 401k funds where others manage their money with regular stocks, would not believe that without looking at the chart. But when you look at that chart and you see the huge differential, it's really stunning. And it's done that in a manner that is unobserved by many market participants. I mean, you and I, that's our daily bread and butter. We follow these things, but really most people do not follow it like we do. And so they would be shocked to see that, and to see how just to say a 10% allocation in their own investing of it would have made a big difference and protected them in ways that no other asset class really does.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.